Hello guys, welcome to Eric Monda Capital, and today we are going to learn about the market structures and the market patterns which are there. We are going to focus on the daily chart. This actually is tradingview.com. It's a very good website for technical analysis and all that we are about to do right now. Yeah, so we are going to zoom out. We zoom out up to 2015. Let me start from here. So you can see we are going to look at the flag, the head and shoulder, the ascending triangles, the W patterns, the M patterns, I believe I mentioned flag, and also and also the market structures that are there, which is the ascending structure, descending structure, ranging markets. Yeah, so let me start by this. This is a descending market structure. Yeah, you can clearly see, and the behavior of descending market structure it's not a straight thing that it will go from this point and then fall up to this point. We call it wavy. It's usually wavy, zigzag, goes up, goes down, goes up, goes down. So in a descending market structure, we see we see lower highs and lower lows. By lower highs, I mean point like this. This was a high. This now it's second high, but it's a low high. Third high, but it's a low high. Fourth high, but it's a low high. Fifth high, but it's a low high. Now, a low is something like this. This is our descending point, another low point, a low, another point here, another point here of low, another point there of low. So you get low highs and low lows. That's basically the structure of a descending market. Yeah, very good pips, very good pips. I can see here it almost gave a whooping sell of almost 18%. Yeah, but if you are willing to wait from March up to the next year, March, so this was actually destined for position traders, which we said that they hold their trades and they trade more on a monthly basis or weekly or even weekly, but spaced out spaces. Yeah, so let's look at another one, the W formation, which is actually this one. Essentially, it just forms the W, essentially. And then when it actually appears, it means that we have a bullish trend in its wake. It actually leaves a bullish trend in its wake, as you can see here. Yeah. So yeah, this is what we call a W formation. So a W formation, once you've spotted it, of course you're going to leave it for it to form. You wait. A good entry point would be around here, after it has marked its first low, and then the second low. When it's marking its second low, that should be your entry point, so that will give you a good almost 10% on the USD, a very good 10%. Yeah, so the opposite of W is actually the M. You're going to see also it in a few. Yeah, this is another W. Yeah, sorry about that. Another W here, which leaves a bullish sentiment on the market. So this is another one. Assuming you don't get on this one, I'm using the daily charts. So you still spot it, track it, track it. Then around this point you make your entry. You can also make your sell here, you can also make your buy here, a short-term buy here, and also you can make your sell here. I'm just talking about the person who's beginning how to trade, and maybe he needs to have that patience and also to confirm, to let the market confirm that this is indeed a W. Yeah, so you can see it gained almost 7% on USD within a span of almost 2 weeks. Yeah, so this is another W. This also is a W, but a very weak W, which, as we have said, leaves a bullish sentiments on the market. So yeah, an average of almost 3%, 4% on this one. It gave a very good some good points / pips there. So another thing we're going to do, we're going to look at the flag. The flag now forms something like this. This is a bullish flag. Let me rename it here. This is a bullish flag, and the reason we call it a bullish flag is that it signifies a bullish sentiment in the markets, in that as we track this thing from here, as we track this thing from here up to here, up to its point, around this point here, we can see that it enters actually what we call a ranging structure, or a ranging market structure, in that it maintains a specific set of levels right over here. So when you notice this aggressive candlestick form, then there is a slight ranging market in the market, and this ranging may also come in a bearish. Right after this bullish candlestick has formed, it may come as a bearish flag. It will form a bearish flag. So you may expect this point here to be at around this point, and this point here to be at around this point, and this point here to be at around this point, something like that. Just know that's an imminent bullish flag, and once it breaks something like this one, and once it broke our levels here, it definitely climbed up to 4.90, which is basically a gain of 3% on USD, which is also a very big money. Yeah, in a period of almost 5 days, 5 to 6 days. Yeah. So that's also another good pattern which you can use. We call it the bullish flag. You can read more about it. We shall run deep with a few, or rather we'll jump right back to it here. So that's the bullish flag. So next we're going to do the head and shoulder. This is a very good one of actually my favorite. Easy to spot, easy to eat. Yeah. So we're going to start here, then we are going to go up to here as we set our left shoulder, our head, right shoulder. Yeah, so something like that. This is another pattern which is very good if you have the patience to wait and really spot it. Remember, I'm using the daily charts. So something like this. This is an head and shoulder, not an inverted. We are going also to look at an inverted head and shoulder, which in this pattern it signifies. So this pattern signifies the bearish sentiment coming after it's spotted. So something like this, when you notice a structure forming, so as an amateur, you know I'll advise for you to wait until it's formed just right over here on the right shoulder, so that you can take all these pips, which is almost 4% in a span of almost two and a half weeks. This is 5, yeah, 2.5 weeks. If you're willing to hold for it in the long run, which is also very good if you trade using the daily time frame. Yeah. So the more these patterns appear on the higher time frame, that is the weekly, the monthly, and also the daily, the better it is that pattern is solid, and it's solid on the markets. Yeah. So let's move to another one. So we go to an inverted head and shoulder. I'm gonna start right here. Yeah. Here. Start right here. So that this becomes my left shoulder, this becomes my head, this becomes the base of my right shoulder, this becomes my right shoulder. Just like that. And again, this is an inverted head and shoulder pattern. And so I begin by saying that if you have spotted this structure and you are an amateur, I would advise for you to wait up to the right shoulder. As you can see, yes, it will retrace and form something else we call a cup and handle pattern. This right over here, a cup and handle pattern, which will push it to climb, to climb and leave a bullish sentiment on the markets. So if assuming you got on right here, you'd have gained a percentage of almost 5%, 7%, up to right over here, from February 27th to May 4th. So the more these patterns appear on the higher time frames, the more they're solid, the more they're also accurate, and so forth and so forth. This is also, remember, you can also get in your trades right over here. Personally, I do get in my trades right over here, then I track it up to here. I don't get on this second wave here, but I get after it has formed, on its way to forming the head, and then I don't get it on right over here. I get it when it's going back down, and then I get out, then I hold it for a little while, because it has completed its structure. So I might get in at here, I might get in at here, I might get in at here, I might get in at here. So all these are viable points for entry. Let's look at another one. So this is a weak head and shoulder, but it is a very good ranging market, to identify a good range market. So in ranging markets, you basically wait for the two tops, two downs to form on this level. So once they have verified this level, and once they have verified this level, you can now trade in between this range right over here, until it breaks just over here. So there are also breaking points here. It attempted also to break here, it didn't. It attempted to break here, it didn't. So it attempted to break here, it didn't. Also here. And also be very careful about their false breakouts. There are true breakouts and there are false breakouts. This was a false breakout. This was a true breakout because it fell after breaking this level. I tend to believe we have this also another head and shoulder. Let's look at it. So we start here, left shoulder, head, right shoulder. Again, this would have given you, if you really got in at the head, would have given you almost 4% on the sell. As we said, this type of pattern, brings the markets to a bearish sentiment. So as we continue with our patterns, there is also a good head and shoulder here. Start with here, our left shoulder, the base of our left shoulder, our head, the base of our head, the right shoulder, and our end point here. So we can see that you can get on your trades here, and also here, and also here, but our main entry point is usually here. This is where you have the strongest amount of pips in this head, left shoulder, right shoulder pattern, or head and shoulder pattern. The right shoulder is where we have the maximum amount of pips. As you can see here, it's almost 5% on the sell. So those are very good pips. So another one I would like us to look at is this descending triangle. Call it a descending triangle. So its essence is that once you establish the base right over here, then you can see how it's behaving. Every peak is descending, a low, high. Our main high here, low, high, and then it begins again to range. Now the thing about this descending triangle is to wait for something like this to establish your own levels, find the support, which is on this blue line here, and your resistance, which is on this another blue line here, after it has begun to range just like this. So when it begins to range just like this, we usually wait for breakout. We can see it tried here, but it failed. It tried again here, it failed. It tried again here, it failed. On our resistance to break the resistance point, it tried again here, it failed to break our support, and also here and here. So the point it broke our resistance was here. So a good entry point will be not on this candlestick, but on the beginning of this candlestick, this right over here, this right over here, just after this retracement. You can see it just right over here. Or alternatively, you can get it at the opening of this one here. If you miss this one, you can then definitely get on this other candlestick just right over here. Yeah, we also have our M. I forgot to show you our M, which is right over here. This is our M formation, and you can see it. Let me just illustrate it for those who cannot see it. Yeah, and we said this one gives a very good bearish sentiment. I mean, it leaves a very good bearish sentiment on the market. Again, with this one, you can get get in right over here. This is your good entry point, and your exit point is just right over here. Yeah, these are very good patterns which are almost repeated on a monthly basis, weekly basis, and also hourly basis, daily basis, depending on whichever time frame you trade. You'll find those patterns there. Yeah. So again, we come here again. This is also another ranging market. Yeah, you can see it here, and you can establish it's a ranging market by using our horizontal line. You can see that it's having a lot of trouble breaking into this level. So when you establish that it has a lot of trouble breaking into this level, we now place our trades on this support and resistance points right over here, on these peaks, here, on this base. Yeah, if you want a buy, you place it on this base, and if you want another buy, you place it on this base. Yeah, so you really need to wait for some of these patterns, because for them to confirm it's a descending triangle, it's a ranging market, it's a head and shoulder pattern is forming, an M formation is forming, a W formation is forming, you really have to wait, sometimes days, sometimes hours, sometimes seconds, yeah, depending on whichever time frame you're using. Yeah, so we have covered the W formation, the M formation, the bullish flag, the descending market structure, the head and shoulder pattern, yeah, and also the descending triangle pattern. As I said, there are many other patterns which we'll also look at them as the market continues to form them, to show you how you can easily trade with the patterns. Yeah, we actually call this naked forex, and you can trade without the indicators, just using your own patterns, or rather the market patterns that have always been there and will always be there. Yeah, so you can follow us on Facebook, Twitter and Instagram. You can leave us a comment, you can contact us via the website, that is www.ericmondacapital.com, and we can have a chat on the markets. Yeah, you have some good products for you guys. You have some merchandise branded Eric Monda Capital for you if you really need them. Yeah, so till the next video, cheers guys.